Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hello, Profit Hackers. This is Jeremy with Foundation Accounting and Consulting, and we are here today to talk about the final portion of budgeting, the fourth step in our budgeting. And to start with, I wanted to tell a quick story. So, at the end of my wrestling days in college, my last year of competition, we decided that we were going to go participate in the freestyle national tournament. Now, this was a tournament where you qualify for the Olympics, and I was super jazzed about going down to participate. Well, in college, we wrestle a style called collegiate, and I was very good at collegiate style wrestling. Freestyle was the type of wrestling that we were going to be doing at the Nationals down in Las Vegas. And I hadn't done freestyle in several years, so I knew the basics still, but a lot of the rules had changed and some of the strategy. And so I was just going to go out there and just wing it, right? Well, I went down there and weighed in and found out that there were 76 people in my bracket. 76. And I had my first two matches all set up, and I showed up to the mat for my first match, and I was all excited, and I went out there and I started to wrestle. And that guy turned me every which way but loose. And I had no clue what I was doing. He was amazing, to say the least. And I was really, really upset about that. And I ended up losing. He ended up tech falling me with just a few seconds left in the match. So I actually held on pretty well. And I didn't know who it was I was wrestling. So I thought I'd just done really, really poorly. And I went out to the hall to throw a tantrum about losing this match. And I was storming up and down the hallway, and I passed by a couple of different booths where they were selling things. And I paused at one booth because I looked over, and the face of the person that I had just wrestled was sitting on a book on top of one of the tables for one of these booths. And I found out later it was Joe Williams. Joe Williams was a 3-time NC2A tournament champion with Iowa, University of Iowa, and he was amazing. He also had a lot of success internationally with his wrestling career and with freestyle, and he actually won that tournament that year and qualified for the Olympics and ended up taking 5th in the 2004 Olympics. And so that helped me feel a little bit better. I mean, I was still mad that I wasn't as competitive, and I certainly could have put in a lot more preparation to be more competitive. But nevertheless, Joe Williams is a very consistent guy. During his career, he could be depended on to win pretty much every match that he stepped out there for. He was very, very consistent. And that kind of consistency also exists in some portions of our business. One of these examples is in the selling, general, and admin expenses. A lot of our selling, general, and admin expenses are very consistent, meaning that we can expect to pay the same amount every month, right? And that's what I want to focus on here for this last portion, is filling out the rest of our selling, general, and admin expenses. So the way that we're going to do that is in the columns on the left, we're going to list all the different categories for our selling, general, and admin expenses. We're going to make sure that all of them are listed there. On a separate piece of paper, we're going to write down each of those categories. And then under each of those categories, we're going to make a list of all the recurring payments that happen every month and for roughly the same amount. We're going to make a list of all of those on that paper, right? So for instance, we may have a category called subscriptions for different software and apps that we're using. Those payments are going to come out pretty much on the same day every month and be pretty much the same amount. So we can actually write down that monthly amount that's coming out each month under our subscription category. And we can do that for each one of our subscriptions. That'll end up giving us a total that we can now rely on for our budget, right? We can now take that monthly number, we can go back to our budget, we can find the line where that category is, the row where that category is, and we can enter in that fixed amount each month under those different months, right? So that we now have it going all the way across. The one tricky thing there is that we do have to make sure that we're including any of those items that are not consistent. Any of those things that can change each month. And the way that we're going to do that is we're going to take the difference between the total for that category for 12 months on our profit and loss and the total for our recurring costs, okay? So for instance, if we have for the whole year, we have $12,000 in subscription costs or expenses. We have $12,000 for the full year, right? That's going to be $1,000 for each month. Well, we go through and write down all of our subscriptions, and we only get to a total of $900 each month. That means that we need to go back and add that extra $100 so that now we have that going all the way across. So it matches what our historical numbers are going to be, because we want to create these numbers based on our historical numbers, right? Things are definitely going to change. And if there are differences, or if you have large purchases or things like that that you expect to have in one particular month, then we can also add those things in. But we want to start with the consistency. We want to start with those recurring amounts. We want to start with the total from the previous 12 months, because those things give us something consistent that we can start with. And then we can add things afterward, right? So we've gone through now all of the steps. We've added in our revenue across the top for each month that we figured out based on the net profit that we want. And we have gone through and figured out what our cost of goods sold needs to be for each category. And we have now gone through our selling, general, and admin expenses and added all of those in down below so that now we have all of those as well, right? So now that we have all of those items All we have to do is take our revenue and subtract the total for our cost of goods sold, and that gives us our gross profit. And then we subtract all of the selling, general, and admin expenses, and that will give us our net profit. And that net profit should be the same amount that we budgeted for previously, right? So in the example we used previously, we talked about $200,000 to be able to meet all those different goals that we had. So if we add up all 12 months, the net profit should be $200,000. If it isn't, then we can go back and start diving into some of those numbers and figuring out what got left out, right? But that is the how to create a budget. And the why to create a budget is like we mentioned earlier. We want to figure out a plan to reach our goals. Remember the 5 whys and how we narrow it down to one very specific why, and then we put a number to it? We want to be able to reach that. And now we've gone through all the different steps and we've created our budget so that we have an idea of what it's going to take to get to that end goal of $200,000 in profit, right? So this is Jeremy with Foundation Accounting and Consulting. We've been talking about budgeting. We've gone through these 4 steps, and now you're ready to take these ideas and go create your own budget so that you have a plan, a map, if you will, to your success. So this is Jeremy, and I will talk to you later. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.